Greetings and welcome to our session. So today I'll be attempting a question from a question paper, a final exam question paper, which was written on the 6th of June 2025, first semester. So I'll be doing question 5. It's the financial statements of a sole trader. So I believe once you master this type of questions, then you'll stand a great chance of acing the final exam. As you can see, this is 60 marks and the paper is out of 200, meaning this question alone counts 30% of the whole paper. So once you master this question, then I believe you guys will stand a great chance of getting those distinctions that we're fighting for. Okay, so without wasting any further time, let me attempt this question with you guys. So I'm not a financial accounting N4 lecturer, but I will try my best to give the knowledge that I have in order for you guys to actually do better than you could have done without this video on your final exam or for your final exam. Right, so let us start. It says you have been appointed as junior bookkeeper for Salon Blessing Beauty. Salon Blessing Beauty trade in a variety of beauty products. The following information was supplied by them to you for the year ending 30 June 2024. So requirements, says required, 5.1, prepare the statement of profit or loss and other comprehensive income for the year ending 30 June 2024. This is formally known as the income statement. Right, and then 5.2 says draft only the notes of the asset section in the statements of financial position as required in the answer sheet. So we are guided by the answer sheet on which notes we should do. The note says Salon Blessing Beauty uses the periodic inventory system. So this is not the perpetual, but instead it's the periodic inventory system. So here's the full question. And yeah, I'll be using the printed question paper. So the reason why I showed you guys and the reason why I told you which question paper I'm answering is so that you can go to your TVET Lite and download that question paper. Then it will be easier for you to follow while watching this video. So the purpose of this video is to help you guys understand more. It's not for you guys to cram, because you're not supposed to cram accounting, but instead you are supposed to understand what you are doing. So that's when they ask you other questions, or when they pose them in another way, you'll be able to actually maneuver around the paper. So yeah, let us begin. So we're going to be starting with the statement of profit or loss and other comprehensive income for the year ended 30 June 2024. As you all know, we start with revenue. So basically, this is found on the nominal account section of your trial balance, which is your pre-adjustment trial balance. All right. Then we are given that the revenue is 478,943. Right, and we have sales returns, meaning the customers who bought returned stuff. So meaning that will decrease our revenue, because remember they bought and now they brought back, so our revenue is decreased. So we need to less the revenue. Njalo sales return from revenue, and we also gave customers a discount. So remember, once you give customers a discount, that will also decrease your revenue. So I just wanna make this, yeah. So we will have to less the discount granted, because it was granted to the customers. Right, so I believe this is the revenue. Okay. Yep. Yeah, this is the revenue. I don't like how it's aligning to, yeah, I like it I want it to align to the right. All right, then obviously you need to less cost of sales, less cost of sales. So this is the periodic inventory, meaning we have to calculate the cost of sales by taking, we're going to actually take opening stock, which is found under the balance sheet section or financial position account section. That's your opening stock, and inventory on 1 July 2023 is 13,708. Right. We then need to add purchases. We then need to add purchases. Purchases. Okay, I think we're going to have to do some calculation for purchases. So we have 106,000 on the trial balance. So one thing for sure that we need to less is the discount received. Remember, we received a discount from our suppliers. So we need to less that discount. And let's also search what else is. There's no returns, and sometimes they call it creditors allowances. Okay, let me just scan the adjustments. Right, I did see an adjustment. The first one says inventory of 2,165 bought was returned during this financial period. These goods were included in the inventory on hand as mentioned above, but no other entries were made. So I think we need to less as it's included here. So I think we need to less this 2,100. So minus 2,165. Yep, and that should be our purchases. Right. Then what we need to check is for carriage on purchases or custom duty or freight on purchases. Oh, I do see carriage on purchases. So remember, carriage on purchases, we also add that's transportation of the goods we bought, carriage on purchases. So we need to delivery fee, if you like to call it that way. We need to add it. It's actually part of the cost of sales. So it's 40,180. I also saw custom duty. So it's custom duty. With custom duty, I see a transaction number 2. Okay, so for every transaction that a problem is I cannot edit this. I need to find a way. Okay. Or I'll just, sorry, let me highlight. Let's undo here. Okay, I can't undo. Okay, for every transaction that I've done, I will actually try and highlight to show that no, I've actually dealt with that transaction. So I've dealt with transaction number 1. Now I'm busy with transaction number 2. It says custom duty for 600 was still outstanding for May and June 2024, right? So we need to add 600 because it's still outstanding. Right, so it's 11,400. It's 11,400. We're going to be adding the 600. Okay. Yeah, so this is our custom duty. Okay. So now I need to less my closing stock. or closing inventory. Okay, let me just change my terminology, because I'm still using the old terminology. So it's opening inventory and closing inventory. So with closing inventory, obviously we're going to find it. Okay, I've also dealt with this transaction, so it's done. So we are going to find it under the inventory on hand at 30 June 2024. This is the closing inventory. So it's 103,723. So it's 103,723. 103,723. I just need to make sure that I less this inventory. Right, so now in order for me to get the full calculation, I'm just going to say equals to minus sum, because I need this I actually need this in brackets, or I need it as a negative, and then from there I will be able to get my gross profits. Okay, let me just put it in. So every amount which is a total, or so all the calculated amounts, I think I'll just write them with bold, and yeah, I think I'll bold and make the words bold and uppercase or capital letters, right? So meaning now this is my gross income. Sorry, it's my gross profit, not gross income. I'm actually I usually teach taxation, which is why I love gross income so much. It's gross profit, not gross income. So this is my gross profit, right? So meaning a gross profit, you take your revenue, you less your cost of sales, then you get your gross profit. Reason why we have this calculation on the side is because when you are actually doing the periodic inventory system, you take your opening stock, you add your purchases, you add your carriage on purchases, and you also add your custom duty, and you less your closing stock in order for you to get your cost of sales. So a periodic inventory system, it's whereby you calculate the cost of sales, right? So moving forward, we are going to be adding other income. So I'll add other income. So I'll just browse through the credit side of the trial balance, the nominal account section. And yeah, I do see credit losses recovered, which is income. And I also see rental income. So let me just check, is there any transactions that could be income? Okay. So rental has been received up to 30 June or up to 31 December 2023. So we're still going to explore that. So we know that rental income is not the final amount, so we still need to do a calculation. An additional amount of 4.8 is must be okay. This is credit losses, almost said bad debts, and then salaries, wara. So salaries are something else. Then it says this is an expense. Basically, we're still looking for income. The sundry expense, we're not going to be looking at expenses. Non-current depreciation, so we're not going to be looking at that for now. It says, okay, obviously this is still for depreciation. And then creates an allowance for credit losses. Creates, so once they say create, it will definitely be an expense because we are creating it from scratch. Had they said adjust, then we were going to calculate and compare, is it an income or an expense. But since they said we must create, then definitely it's an expense. Then it says provide for the following interest on loan. So since this is a loan, then yeah, it's definitely under finance cost. So yeah, meaning we only have two income items, which is credit losses recovered, formerly known as bad debts recovered. So we have credit losses recovered, credit losses recovered. I didn't see any adjustment on credit losses recovered, so I'll just put it as it is. It's 13,800, right? Then we are also about to calculate the rent income. So rental income. Okay, let me just go to another sheet to do the calculation, right? So allow me to use this other sheet to do the calculation. Okay, so obviously it starts from 1 July. So I'm just going to say July. Okay, and then up until June, yes. So obviously this is 2023. So this will all fall under 2023, while this will fall under 2024. Sorry, let's just dollar it like this. Yeah. So this is our time period for our year. Okay, let me just adjust, or let me just make everything centered. Yeah. So this is how our year looks. This is how it looks. This is the beginning of the year, and this is the end of the year. So let us now read what the transaction says, so we'll be able to actually do the calculation accurately. So it says for rental income, rent has been received up to 31 December 2023. So it means rental income has been received up until here. Let me use green. Yes, we have received this. So the total that we've received is 24,000. Right. So now we need to get the rest of the year. So we have not received this as yet. So it's still outstanding. Okay. So it's very simple. We've received for 1, 2, 3, 4, 5, 6 months. So we're going to take this 24,000 divided by 6. So this is the amount of rent per month. So this is per month. Right. So meaning we actually receive 4,000 per month. So it's 4,000, 4,000, 4,000, 4,000, 4,000, totaling to 24,000. Okay. And now we need to actually account for January, February, March, April, May, June. So which is 4,000 for each and every month. So meaning it's actually 1, 2, 3, 4, 5, 6. So it's 4,000 times 6, because it's 6 months. Another 24,000. So 24,000 plus 24,000, what does that give us? 24,000 plus 24,000, that gives us 48,000. So this means our rental income, let me just put the final amount, is 48,000. We've already received 24,000. Now, how are we going to get the remaining, the balance that we have not received yet? which we normally call accrued income. So we're going to take the final amount minus the amounts we have received. Then we're going to get what we need to add in order for us to get the rest of the amount, which was 24,000. So this is accrued income. So let me turn it green. Let me turn it green. It's accrued income. Now this green is not, yeah, I think this one is better. So this is accrued income, guys, and this is my color coding. So I'll actually turn it green because we're still gonna need it. I think so. I think we're still going to need it when we are actually doing the trade and other receivables, right? So there's no other income, meaning I'll be adding these two. So I'll be taking this plus this. Yeah. So as I said, all the totals, I'll make them bold, and the words will actually be in capital letters. Sorry about that. Right, we move. Okay, so we then add these two to get a gross income for the year. My favorite, gross income. So when we get to income tax, you're gonna understand why gross income is my favorite. All right. So basically, you need to know the formats of the income statement. You need to know it off by heart. So that's the first thing you need to do. You need to try and know the format. After that, it will be easier for you guys to actually the income statement, actually fill in the amounts. So the most important part is actually knowing the format first. Right, we then move to less. It has to be in caps, so it's less distribution, administrative, and other expenses. Distribution, administrative, and let me use the sign and other expenses. Let me just dollar it like this. It's too long. Yeah. So we are lessening this, guys, which is distribution, administrative, and other expenses. Formerly, we used to call this operating expenses. All right. So normally what I do is I actually go straight for the adjustments here. So I go straight for the adjustments just to get all the marks. Just to get all the marks. So to get most of the marks, okay, sometimes we might not get everything right, especially since you are being assisted by a teacher a lecturer who has rusted when it comes to financial accounting. But still, this is how I attempt it. Okay, so I go straight for these amounts. I go straight for these amounts, meaning I go straight for the adjustments first. Right, we've done the rent, so let's scratch it out. Yeah, so now I know exactly what to deal with. So as soon as we finish, we just have to scratch it out. Okay, so now I know what is left, so I'm going straight for these adjustments. Then we move. Okay, I'll be starting with packing material. So that's the first thing I will do. Okay, sorry. So remember, packing material is a consumable. What are consumables? Is some things that it's things that we buy to use in the business, to consume, to use it up. Like, for example, you can buy a printer. You cannot use up a printer, but a cartridge is something that you always refill. You always buy to use up. So those are consumables. So when it comes to packing materials, it's also a consumable. So we buy to use it. All right. So meaning I'll go to the pre-adjustment trial balance. So this is what's left. But let's see, we bought for, let's see how much packing materials we bought. We bought 12,000. It was worth 12,000. So meaning I'm gonna take this 12,000 less what is left to get what we actually used. Don't know if I'm making sense, but hopefully I am. So we're going to less what we have used. So we're gonna take this 12,000. We're gonna less this 2,000. No, we don't even need. Yeah. So we bought packing material worth 12,000. We are left with 2,277, meaning we used packing material worth 9,723. Okay. As I said, I'm going straight for the adjustments. Okay, we are done with this one. For now, we move. Okay, rents was an income, so we're done. It says an additional amount of 4,800 must be written off as irrecoverable. So these are credit losses. Credit losses. Okay, let me go check my trial balance. Yes, I do have credit losses. Okay, told you guys I'll be using the question paper as well. Oh, I think it's fine. It's fine. Looking at the trial balance, I'll just go to the screen for adjustments. So credit losses, right? We've already written off for 16,130, and we need to write off some more credit losses. Okay, of 4,800. So we need to add this 4,800. That's 48,000. Yeah, so there's a reason why, guys, I'm actually doing this. It's so, as I said, I want to maximize. I want all the marks first before getting the other items which have no adjustment to it. Right, we are done with this adjustment. Done and dusted. On to the next one. It says number 6, salaries were paid for 10 months only. And then it says, note, on 1 May 2024, salaries were increased by 10%. Okay, I think we need to go to our timeline. Let's go to our timeline. Here's our timeline. Just get rid of this because it's done. Okay, and then here, let's take it back to the original font. Okay, so it says salaries are paid till for 10 months. So I think this is what they mean. So July, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, now let us get the total from the trial balance. So the total of salaries and wages, or it's only salaries. I'm still checking, finding them. Yes, here, found them. 173,800. So this amount is for 10 months. So let me get the amount per month that we paid. So I'm going to take this amount for 10 months, divide it by 10. So meaning we actually pay 17,380 per month for salaries. you don't believe me, let us sorry, 17,380. Yeah. So basically, when you add this together, I'm just going to do auto sum so you'll see. It gives you, yes, so it is 10 months. Right now, what does the adjustment say? It says on 1 May 2024, salaries were increased by 10%. So meaning from 1 May and June, which is the 2 months that we haven't received yet, salaries were increased by 10%, meaning 10% added to the 17,380. So now let us do this. We're going to take this. Okay, before we even do that, let us agree that each month the salary is 100%. So it's 100% each month. And then it was increased by 10%, meaning it's 100%, which is the original amount. We're going to be adding the 10%, which means now the salaries is 110% for 110% for May and June. So now it's simple. We're going to take the original amount multiplied by 110%. So meaning the salaries and wages, sorry, it should be the same. We're going to take this amount multiplied by 110%. Meaning the salaries for May and June were not just 17,380, but they were 17,380 plus 10%, making it 19,118. So now when we add all of these amounts, we actually get 212,036. Okay, let's add these two. I think we're gonna add them here. Now I'm adding May and June. Yeah. So when I take this for 10 months plus the 2 months, I should get the same. Yeah, it is. So now this 38,236 is for 2 months, and this 173,800 is for 10 months. So I'm not sure if I'm making sense, but yeah, this is how it goes. So now let us try to actually do it on our statement of profit and loss. So salaries, so it's salaries, sorry, right, we're going to take this 173,800, we're going to add, so it's plus, let me just put this, yeah, we are going to add, remember we said 173,800 divided by 10 multiplied by 110 to get this 19,000. So this calculation will help us get this, sorry, this 19,118. Meaning we're going to take this 173,000 divided by 10, then times it by 10%. This will give us what? Now this will actually give us the amount for after increment. After increment, then we can times that by May and June. We can times that by 2. Yeah, I think that will give us the total amount. Let's see if it works in a calculator. Voila, it does work. So yeah, I think this is all the information that I just broke down here. Yeah, and we get the same amount. So meaning this calculation now is actually an accrued expense. We have not paid yet. We still owe it to the employees. Yeah. So when you take a calculator and then you say 173,800 divided by 10 times 110%, close bracket, then times 2, you're gonna get the 30. Let's check the amount. You're not got 38,236, which is the accrued expense. Which is the accrued expense. We move. We are done with this. Remember, we are here for the max. Right. Adjustment number 7 says the sundry expense account includes an amount of 24,000 for an annual bonus which was paid on 30 September 2024, or which was paid up to 30 September 2024. So this 24,000 is an annual bonus paid up to 30 September 2024. Now let us go and look at our let us go look at our financial or our time period. So let us carry on from here. Okay, we are done with this, so I'm getting rid of it. Okay, even here, let me just put it back to normal. Okay, there won't be any color here. And with the red, everything must be automatic. All right, let me carry on till September here. Yep, it's 2024. Right, so let us remember that our year ends in June, so meaning these months belong to the next financial period. They don't belong to this financial period. So how many months did we actually prepay this amount for? We actually prepaid for June, July, August. So it's 3 months. So the amount, okay, let's start here. It's September. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Something tells me we actually paid this period of 12 months. So it was 24,000, making it 2,000 per month. Right. So I'm sure when you add that, it will give you 24,000. Here's this 24,000. Yes. So basically, from October till June, it belongs to this financial period. So yeah, it's fine. It's green, so it's a plus. Let me just put it under green. Yes. So it belongs under this financial period. And from July till September, it belongs to next year. So meaning these 3 months are not supposed to be accounted for in this year. So what to do is to actually take this 24,000, because it's an annual subscription, divided by 12. You then get the 2,000, which is where I got the 2,000. So every month it's 2,000 monthly, right? Then meaning the 2,000 for July, August, and September does not belong to this year, meaning the total, this 24,000, we only need 18,000. How did I get the 18,000? I actually added from October the 9 months. I actually added the 9 months. Or since I already know it's 2,000 per month, then you can just say, okay, 2,000 times the 9 months. Because when you take the 3 months that you actually prepaid minus 12, you get 9. So you times it by 9. That's where you get the 18,000 from. So that's how we got to 18,000. Right? So I used multiple ways of getting it. Now, when you actually take this 24,000 and you minus the 18,000, you then get 6,000. Or you can just say, okay, there are 3 months which we prepaid for. So I'm going to take this 2,000, I'm going to times it by 3. You actually get what? 6,000. So meaning for sundry expenses, we are going to minus the 3 months that does not belong to this year. So it's sundry expenses. So we are going to be taking this amount, which is 86,220. Remember, within this amount, there is the 24,000 they told us about. So meaning this 24,000 is actually within this, it's included in this 86,220. So what we need to do is we need to minus the amount that does not belong to this year. In this case, it is 6,000. So I'll be calling this prepaid expense, and I'll be giving it another color code. Let me make it orange. Is this orange? I think I'm colorblind. Don't have my glasses with me, so forgive me. Yeah, I think this is orange. If it's not orange, then I'm sorry. So with my color coding, I said the green is for prepaid, it's for accrued income, and then the red is for accrued expense, and then the orange is for prepaid expenses. Yeah. So now it's easier. I can just say equals to 86,220 minus the 6,000. So that's how I got the 80,220. Right, we move. As I said, guys, I like to actually deal with all the transactions first. Then after that, we're going to do the rest of the amounts. Okay, now I'm on number 8, adjustment number 8. It says non-current assets must be depreciated as follows. Equipment at 20% per annum according to diminution balance method. So we know there are two methods of calculating depreciation, which is a straight line method and a diminution balance method. This is also known as a reducing balance method, and a straight line method is also known as the cost price method. So it says a second-hand vehicle, 40,000 was purchased on 31 December 2024. Okay, so let me just begin by calculating a depreciation for the equipment. Right. Okay, I'll be doing it here on the side. Okay, let me just bring back my timeline. Okay, I'll start by actually getting rid of all of this. It's no longer there. It's just using it to, okay, my timeline is still the same, but I need to get rid of this and all of that. Let me just use an eraser here. Sorry, eraser, I meant. Okay. Right. So basically, this is the timeline we're working on. Right. So with a depreciation on equipment, it's so straightforward. You just take the amount from a trial balance as it is, which is, here's the equipment, 157,800. You need to minus accumulated depreciation, and then you multiply it by the percentage. In this case, the percentage is 20%. So yes, I'm going to be calculating it here. So I'll be starting with equipment. So I'll just say equipment. So I'm busy doing the depreciation. Okay, now how do I go about doing this? As I said, I will take the amount of equipment from the trial balance, and then I'll minus the 17,800. That's how the diminution balance method works. So once you minus the two, you then get an amount of 140,000. Then you just take that amount, you multiply it by 20%. So this is a depreciation for equipment. Let me write it this side. Depreciation. Depreciation for equipment. So this is the final amount, right? Of which what I did is I took equipment minus accumulated depreciation. Let me just do it like this. This is equipment, and then this is accumulated depreciation on equipment, and then it's multiplied by 20%. Yeah, so that's how I took, it's a diminution balance method, meaning, or a reducing balance method, meaning you take the cost price minus accumulated, then you get the total, you multiply it by the percentage. In this case, it's 20%. That's how we got the 28,000. So with depreciation already, I can start by saying, okay, depreciation it's 28,000 for equipment. Now I need to determine depreciation for a vehicle. Okay, for vehicles, let's go. So there's, okay, let me just copy this because I don't want to disturb the calculation for equipment. Okay, for vehicles, let me just check the transactions here. It says, let me just open it here, it's fine. It says vehicles at 15% per annum according to the cost price method. And then it says a second-hand vehicle, 40,000, was purchased on 31 December 2024. Okay, now let us check that out. Oh, I think they made a mistake here. Yeah, I think they made a mistake. I think they wanted to say 2023, but that's just me thinking. Because, okay, I'll check the memo to see what they were trying to do. But looking at the final amount, okay, let's go to the trial balance. It says vehicles 170,000. So this is the final amount, 170,000. So this December 2024 is around, yeah, let me show you where it is, which is why I think they made a mistake. Yeah, it's there. It's there. Because here is January 2024 till December 2024. So they said this 40,000 was bought, and yeah, it's a mistake because how do they know the future? It was a mistake. I'm sure they wanted to say 2023, so they wanted to add this 40,000 here. I hope I'm making sense because we are busy doing this year, which ends this year. This is the year end, and this is the beginning of the next year, so it couldn't have been this. So it's a mistake that the examiner made. That's what I think. So it means this 170,000 includes the 40,000. So to get the amount in the beginning, you must take the amount at the end minus the addition. So it means when we opened the year, okay, let me just push this one down a little bit. It means when you open the year, the vehicle was, okay, there are two ways of calculating this. Number one, we can say this 130,000 was present for 12 months. So we can say this was present for 12 months, meaning it was there till June, which is month number 12, this 130,000. And this 40,000 was present for, we're still going to count. Let's use, yeah, this blue is fine. It was, okay, it was, from here it's 1, 2, 3, 4, 5, 6, 7. For 7 months. Let me just confirm the dates. Was it the 1st of December or the end of December? Oh, it was the end of December, meaning we're going to start counting it as from January. Yeah, because it was the end of December. So this was present for 6 months. So there are two ways of determining this amount. Or we can say this 130,000. Here's another way. 30,000 was present for 6 months from July till December. This is the other way, right? And as from, we added 40,000. Remember, it was 140,000. It was 130,000. Then an addition happened of 40,000, meaning this 170,000 was present for 6 months. Yeah, so those are the two ways you can do this calculation. Okay, let us start with this calculation. So I'll be starting with this one. So meaning, okay, let me just add some lines here so it will make sense. Okay, now I'm starting with the 130,000. So this 130,000, I'm going to be multiplying it by 12% times 12 over 12. So I'll take this 130, multiply by 15%, which is the percentage, multiplied by 12 over 12. Remember, we said it was present for 12 months. So here is the depreciation for the 130,000. Now let us do for the 40,000 alone. So this 40,000, we're going to multiply it by 15%, and we're going to multiply it by 6 over 12, because remember it is present for 6 months. So we get 3,000. So when you add these two, sorry. So let me just push this up. Yeah. So meaning now when you add these two, the depreciation that lasted for the vehicle that lasted for 12 months plus the one that lasted for 6 months, you then get total depreciation. So this is the depreciation, right? And then let us look at this way. So we're supposed to get the same amount. Okay, we said this lasts for 1, 2, 3, 4, 5, 6 months. Meaning we're going to take this 130,000 multiplied by 15%, multiplied by 6 over 12. So we got 9,750. Now we need to calculate for 170,000. It also lasted for 6 months. So equals to 170,000 multiplied by 15% multiplied by 6 over 12. So we've got 12,750. So when we add these two, we are supposed to get the same amount, which is 22,500, and it's depreciation. So depending on the method that you prefer, yeah, it will be up to you guys. So meaning for vehicle, total depreciation is 22,500. So now I can add that 22,500. So this is 28,000 plus 22,500. Yeah. So that's the depreciation. We move. Okay. As I said, after every adjustment, I will be marking it as done. Right. So even this one is done. It says create an allowance for credit losses at 8% of trade and other receivables. So this is straightforward. We're just going to call it allowance for credit losses. Allowance for credit losses. Okay. So basically this is how you do the calculation. You take the account receivables found under the financial position account section. Account receivables here, 144,800. So 100 and okay. We take account receivables. Which is 144,800. We less credit losses from the adjustment. We less credit losses from the adjustments. And if I go to my income statement, I think I'll find them here, 4,800. So we then less the 4,800. Sorry, we less 4,800. Yeah. Then these are our trade receivables. Or yeah, these are our trade receivables. We then multiply them by 8%. We then times them by 8%. Remember, we are given the percentage. It said adjust. It says create, not adjust. Create an allowance for credit losses at 8% of the trade and other receivables. So we're just going to take this amount, we multiply it by 8%. So we get 11,200. So meaning this is our credit losses. Okay. Sorry. Right. We said 144,800 minus 44,800. And then we multiply that by 8%. So that's how we get 11,200. All right. So now, since I'm done with the adjustments, let me just confirm. Yes, even this one is done. Remember, this one goes under finance charges. So I'll be doing it when I'm busy doing finance charges. So let me just check for other expenses which are not part of the adjustments, and then I'll put them as they are. Right. So I'll have to look them on the trial balance. So already sales returns, it's done. It's also done. Carriage on revenue. So carriage on revenue, that's something that you should actually put as it's an expense. It's a normal expense. So we need to put it here, carriage on revenue. Uh, Carriage on revenue. So we're going to be putting it as it is. It's 43,020. Okay, now let us look for other, right? Custom duty we've dealt with. We've dealt with credit losses. We've dealt with packing material. We've dealt with salaries. Stationery, we haven't dealt with stationery as yet. So we need to put it as it is. So stationery. So stationery is stationery. There's no movements. Excuse the pun. Stationery. It's right. We move on. Um, Sundry expenses we've dealt with, and then there's a loan. Okay. Right. All right. We actually did everything there is to do. Now let me just total the expenses. Okay, I got 433,543. Right. So then I now get the profit before finance cost. So I get profit before finance charges. Which I'm taking these two. Yeah. I'm also going to make this bold. Yeah. Okay, so now I can actually do the finance cost. So I'll have to less the finance cost. So now it's less finance costs. Okay, so remember here it could be interest on overdraft, it could be interest on loan, interest on bond. So any interest that is charged or that's an expense is actually considered finance cost. All right. So meaning in this case we have interest on loan. So it's interest on loan. Right. And then I'll have to read the adjustment. It says provide for outstanding interest on the loan. It says note the interest rate on the loan from ABC Bank was increased by 2.75% on 1 January 2024. So now let us go to our timeline. Okay, let me just do this now. this thing of deleting is going to take long. Yeah. So this is our timeline. So it says, let's go back to the adjustment again. It says the interest rate on the loan from ABC Bank was increased by 2.75 on 1 January. So meaning we added January, there was a plus 2.75%. So now let us go check our trial balance, how much the interest was. Okay, so it's 11%. So this means it's 11% at the end of the year. Okay, so now this will actually mean the interest rate is 11% at the end of the year. So at the beginning, we didn't have this plus 2.5, so we need to less it, meaning it was 8.25. So now we have two ways of calculating this interest. We have two ways. Number one, okay, let's do this. Number one, we can say this 8.25 stayed for 12 months, while this 2.75 stayed for I like to say 6 months. So let's count 1, 2, 3, 4, 5, 6. Yeah, for 6 months. Or using the exact same logic, let's just copy, paste here. So we can say this now didn't stay for 12 months, it stayed for 6 months. So this 8.25 stayed for 6 months, which is from July to December, and then we added 2.75% on 1 January, making it 11%. Remember, and say this plus this, it then made it 11%. So this 11% stayed for 6 months. Okay, let's not put anything here. Let's put it here. Okay, let's start by making it 0 decimals. Yeah. So this stayed for 6 months. Yep. Yeah, so basically, when calculating this, you're going to have to take the amount of a loan, okay, let's start with this one. We are going to have to take the amount, which is 240,000. Here's the amount, 240,000. Remember, we are starting with the 8.25, which stayed for 12 months. Take the 240,000, multiplied by 8.25% times times 12 over 12. Remember, we said this one stayed for 12 months. So that's how we got, the 19,880. Now we're going to be calculating for the 2.75, which is for 6 months. So we're going to take this 240,000 multiplied by 2.75%. It stayed for 6 months, multiplied by 6 over 12, which is how we got the 3,300. Okay, let me just put this here. Yeah. So now it's easy. I can take the amount for 12 months plus the amount that stayed for 6 months, which is why I got the 23,100. Okay, then the second way, we did say this 8,25 stayed for 6 months. So I'm going to take this 240,000 multiplied by 8,25 multiplied by 6 over 12. Okay, we got 9,000, 9,900. And we said, okay, this is for the 6 months. Then from January, it increased by 2,75, making it 11%. So this 11% stayed for 6 months. So we're going to take this 240,000 multiplied by 11% and then multiplied by 6 over 12. So we get 13,200. So when we add the two, the first half of which was when the rate was 8,25 and stayed for 6 months, plus the second half, which is the 11% which stayed for 6 months, we still get the 23,100. So basically, with the so basically with the interest on loan, the final amount is 23,100. That I'm sure of. Now let us see how it was calculated. Right. So it's 24,800. So it looks like we actually prepaid. No, not prepaid. Yeah, we prepaid this interest because the final amount is 23,000 and we've already paid 24,000, meaning now we need to minus. So let me do a calculation on the side. 24,800 minus 23,100, we get 1,700. So we need to less this 1,700. So that's how we take this 24,800 minus 1.7 and then we get this 23,100. So with the calculation, I'm sure it will be in your interest to actually show the full calculations, especially for depreciation. You can show the full calculations for a vehicle and for equipment. Yeah, I think you will get extra marks for showing the full calculation, not just these amounts. Even here too, you actually need to do the full calculation in order for you to actually get the full marks, that is. Right, so here obviously we're going to be taking this as is. Then to less these two, yeah, it's 3,300, which is net profit for the year. So it's net profit slash loss. Okay, I didn't get to finish the answer book, of which I think you're going to be using this other spaces for calculations. Like for example, the calculation we did for depreciation, I think it's important to show it. Yeah, I think you need this column and the other column to show calculations. What else did we, okay, this is a full calculation, so it's fine. Even this one, it is a full calculation. But I think the better way is to actually put the final answer here and then show the calculation underneath. Like this calculation, you can show it underneath. Yeah. So I think that way you will fill up all the spaces. So this is the final amount. Yeah, so all these calculations that I was showing you guys on the side, I think you need to find a way to actually show. Like for example, for this depreciation, you need to put like this, when we took 40,000 times 15% times 6/12, we got 3,000. And then even here, this 130, yeah. So I think you need to show these calculations. It will be it will be beneficial for you guys to show such calculations. Even here, you can show the calculation. And then I think you will take advantage of getting the full marks. So I was doing the calculations on the side so that I can show you guys how to do these transactions, or actually explaining so you get a better understanding. But when you write your test or your examinations, it will actually be of your interest to show full calculations on the provided answer sheet. And I'm sure your accounting lecturers do show you guys how to show the calculations. For what I was interested in is actually making you guys understand how to do and how to actually open your timelines in order for you to do the calculations accurately. So yeah, I hope the session is beneficial to you, and I'll come back to do the notes to the balance sheet. So for now, I think this video is complete, and then I'll use the same video to actually, I'll use the same income statement, or rather statement of profits or loss and other comprehensive income for the year, to do the notes to the balance sheet as required. So for now, let us stop here, and then I'll give you a second video. I think it will be a shorter video so you can get the notes that they asked. I think it was only 2 notes, which is property, plant and equipment, and then trade and other receivables.